Hello everybody and welcome to Beginning Stock Trader. Today's lesson is going to be on learning to understand how to read stock charts. And so we're going to use TD Ameritrade's platform to view a few different charts and explain how they work. We're going to start with a really basic line chart. As you can see here, on the vertical axis of every chart, we can see the price of a stock. And so this particular graph shows this stock has ranged between about 0 and 20,000. And this particular stock is being measured in US dollars, but it will always be measured in the currency of whatever country the stock is being traded in. And so as you can see here, the horizontal axis is the time frame that we want to see the chart in. And as you can see here, this particular chart goes from 1991 to 2013. So it's a very big time frame. And as you can see here, this stock has done very well for itself. And so in 1991, it started down here close to zero, probably about 2,000, and we'll say $2,000 per share here. And for about 10 years, you can see the company kind of going up and down. Maybe they announced something good here and had some bad news here. You can see that not a lot's happening with this company until about 2003 when they just take off. And maybe they made a big announcement there. There's a number of reasons that this could happen. But you can see that the price just shoots up for about 5 years, so 2003 till about 2007 or 2008. You can see the price of this stock just increasing rapidly. And for all you history buffs out there, 2008 was a big recession in the United States, and you can see the effect that that had on the stock price of this company as well, as it goes all the way down to about $10,000 per share, which is about half of what it was at $20,000 per share. Then you can see a very quick recovery in 2009 here as it recovers in about 2 years and gets all the way back to $20,000 per share. The entire reason that we view stock charts is that we're trying to identify patterns. And so market traders are looking at different prices of stock, and they're trying to identify points where that price will change direction. And so maybe the price is climbing for a few months, and then it starts to drop, and then it climbs for a few months, and then it starts to drop. And they're trying to find those points where it starts to drop so that they can sell before that happens, and then buy once it starts to climb again. So this is a company called Lannett Company. Their stock symbol is LCI. And you can see here a very clear pattern on their stock price chart. And so we can see price here. We can see the time frame here. It's a little over a year. And you can see that there's some very clear points where the price of the stock starts to go down and where it starts to go up. You can draw trend lines in TD Ameritrade, and you can see almost a perfect trend here of when the stock price changes direction and starts to climb again. There's another trend you can see on the top here. You can see that it every time it gets to pretty close to that line, then the price starts to drop until it hits the bottom line. And this is a real easy pattern to identify. It's called a channel. And as you can see, there's a lot of money to be made if you can identify these patterns. And so, yes, you could purchase shares of stock right about here, $35 or $40, and then sell it at about $60, and you've made some good returns. But what if you could purchase right here and sell here, and then purchase some more way cheap down here, sell it at about 50, buy it again at 30, sell it at 60, buy it again at about 41, 42, sell it at 70. If you can do that, there's a lot more gains to be made. And this is just one price pattern with one stock. And so we're going to talk about a couple different basic patterns to look for that you can just see with your eyes. But there's tons of different patterns out there that you might need computer programs, or you might need more training to identify. And so we're going to give some recommendations on how to learn those at the end of this video as well. The first type of chart that we're going to look at is called a candlestick chart, and we're going to use Apple stock as our example. As you can see down here, we've got a time frame on the bottom like always. This one goes from the 30th of November through the 8th of February. And as you can see here, it looks very similar to a line chart, but it has these candlesticks. And each one of these candlesticks represents a single day in the life and the price of this chart. And each candlestick has multiple attributes that we'll talk about. We're going to start with color. And so the color of the candlestick tells you whether the price of a stock ended that day higher or lower than the previous day. And so if it was green, if the candle is green like this one right here, then you know that the stock price closed at a higher place than it closed the day before. If it's red, then you know that the price of that stock went down over a 24-hour period. And the second thing we're going to look at is those wicks on the top and the bottom, and they're showing what the high price and the low price of that day was. So looking at this one right here, you can see that at some point in the day the stock was selling for a price a lot higher than this low one, where at another point in the day it was selling for this price. And so if you see a very long candlestick with very long wicks, then you know that this is a volatile stock where the price changes quite a bit even in a single day. And the last thing we're going to look at is the actual candle part, or the wax, I guess you could say. And this just tells you the opening and closing price of the stock. And so you can tell on some of these that the opening price, or the price the stock was selling for at the opening bell, is very different than the price that the stock was selling for at the closing bell. And so a lot happened in that day, and you can see that maybe people got bad news, or maybe people got freaked out. A lot of different things could cause it to happen, but you can see that these big bars mean something big happened that spooked people, and a lot of people sold, or a lot of people purchased if it's green.
First type of pattern that we're going to look at is called support and resistance. And the concept of support and resistance is incredibly simple. You can think of support as a floor, and whenever the price of the stock gets down to that floor, it starts to bounce. And so for an example here, you can see that this particular stock, the price is dropping. For about a month it continues to drop, and then right here at about $285, and you can see that over here, $285, it bounces and starts to climb again. It goes down again after a little while, and then another bounce at $285, and then you can see it for about a month and a half. It goes down again, another bounce at $285. And so each time the price of the stock hits this floor right here, or this support, it bounces. And the same thing can happen on the top, and that's called resistance. If a stock is climbing until it hits a certain number and then it bounces down, then you know that that's resistance. And every time the stock hits that price, you should probably sell. And so it's really easy to use support and resistance to see and decide when to buy and sell a stock. You know that you want to buy low, and so you'll buy a share or multiple shares of stock right here at about $285, and then you'll hold for a little while and sell maybe around $350. Then you'll wait it out again. You'll buy at about $285, and then you'll hold and sell. Buy at $285, hold and sell. And so it's really easy to see when to buy and sell with support and resistance. And as you can see here, it's very clear where the support is on this particular stock. And not all stocks have this, and it's not always this clear, but it is sometimes. And so keep an eye out for support and resistance patterns, and you can get easy gains. Alright, now we're going to talk about something very similar to support and resistance. It's called a trend line, and this particular trend line is called a channel because it has a trend line on the bottom and a trend line on the top. And as you can see here, this is a stock trader's dream. It's very, very easy to see the pattern here. There's a very clear channel where the stock price is staying in, and every time the price of the stock reaches the bottom of the channel, it bounces. Every time it reaches the top of the channel, it bounces. And it's very easy to see where the price of this stock is going to go in the future. And so as a market trader, you would sell the stock right here, you would buy the stock right here, you would sell it right here, you would buy it right here. And you can do this multiple times until the channel is broken. Once the channel is broken, you no longer have a pattern that you can look at, and so typically I will pull out of that stock if I'm using trend lines to decide where the price will go.
Alright, the last pattern we're going to look at in this video is a commonly called pattern called head and shoulders, and this is exactly like it sounds. You are trying to find a pattern in the chart that looks like head and shoulders, and here's a good example here on the picture. To those that know how to read a head and shoulders chart, it's a good sign that the price of a particular stock is about to stop climbing and about to start dropping. And so what you're looking for is a pattern where there's a shoulder, and then you can see a head, and then the second shoulder is actually lower than the first shoulder. And what that means is that the price of this stock failed to reach new highs, and then on its return it failed to break its previous highs. And so it's a sign of weakness. And this likely means that the price of this stock is going to start dropping for a long period of time. And so if you want to short the stock, that could be a very good idea at this point. There's also reverse head and shoulders, where this would be completely upside down, and it's a sign that the price of the stock is about to turn around and start climbing for a long period of time.